Today, the markets are anticipating preliminary estimates of business activity indexes. However, their influence on trading may be minimal. Growth in all indicators is predicted both in Europe and the United States. The only difference is that PMIs in Europe should rise a bit stronger. The beginning of a monetary easing is so predictable. For example, the Reserve Bank of New Zealand surprised markets when it not only abandoned expected rate cuts but also raised to its forecast for peak interest rates. The market is likely to give a muted response to the PMIs. The modest reaction followed yesterday's inflation report in the UK. The UK CPI decreased from 3.2 to 2.3% on a year in April. However, consumer inflation exceeded forecast. Therefore, the pound sterling remained resistant to the pressure of the US dollar. In addition, the British currency received support from the announcement of the parliamentary elections in the UK, which will take place on July 4. On Wall Street, a negative shift in risk sentiment sent stock indexes into the red zone. The S&P 500 pulled back significantly from its record highs and today was trading in a lower range of 5,286 to 5,323. At the same time, the scale of the dollar's advance turned out to be symbolic. The greenback was growing for the whole day and ended only during the New York session. Despite the sluggish momentum, the US dollar was able to demonstrate yesterday its best intraday result this month. Today, the dollar index relative to all its major peers is trading near a one-week high in the corridor of 104.70 to 105. The main driver of the US dollar's growth was the minutes of the Fed Reserve's policy meeting, and they delivered clearly hawkish signals. Some policymakers expressed a readiness to raise interest rates if US inflation does not fall as quickly as expected. Therefore, the timing of the first rate cut in the United States may shift from September to November, and since the regulators' meeting will take place immediately after the presidential elections, the currency market will trade under extreme volatility in early November. In the meantime, let's see how currencies reacted to the first reports on business activity metrics. In Germany, the leading economy in the Eurozone and the third in the world ranking, the manufacturing PMI climbed to 45.4 points in May. Thus, the index reached the highest level in 4 months. On the flip side, it's still below the critical line of below the crucial line of 50 points, but the decline in industrial production has slowed to its weakest level in the last 13 months. The preliminary index of Eurozone manufacturing activity also rose to 47.4, the highest level in 15 months. Last but not least, the composite index, which also takes into account the services sector, grew to 52.3, to its highest level since the beginning of the year. The data showed that the economic recovery in the Eurozone is gaining momentum. Meanwhile, inflation rates, both factory and consumer inflation, have ebbed away. Amid upbeat Eurozone PMIs and a weakening US dollar, the euro-dollar pair demonstrated a V-shaped recovery, and the price pulled back from 1.28 and is set to return to a 2-month high around 1.09. All in all, the euro has lost a lot since the beginning of the week. At the same time, its vigorous growth in the green range of 1.0815 to 1.0848 may be interrupted today after the release of similar economic reports in the United States. If the instrument settles below 1.08 during the day, a pullback will be repeated and may even be extended. But in the future, the single currency will still be guided by market expectations regarding the rate cuts by the European Central Bank. It's believed that the ECB will make its first dovish decision on June, and in a total will reduce its interest rates 3 times. However, there is no clarity in further policy actions of the Eurozone regulator. As aggressive monetary easing could again increase inflationary pressure, many ECB policymakers are making future decisions depending on economic data. Oil prices today are influenced by the decisions of the Fed Reserve made 2 weeks ago. The minutes of the Fed's policy meeting indicated the regulator's readiness to further tighten its policies in a case of a sharp rise in inflation. This could potentially harm energy demand in the world's largest oil consumer. As a result, the benchmark Brent price sank to almost $81 per barrel and continued its decline for the 4th session in a row. In addition, last week, crude oil inventories in the United States, instead of the expected decrease by 2.5 million, on the contrary, expanded by 1.825 million barrels. Nevertheless, it's still very premature to say that the market sentiment has changed. Most likely, we observed only a local breakout, followed by an inevitable pullback and return to the already familiar range of $82 to $84 per barrel. Now, all the market's attention is turned to the upcoming OPEC Plus meeting scheduled for June 1. Key oil producers are expanded to extend production cuts again to prevent a global oversupply and support prices. Also, on February, Russia said it exceeded OPEC Plus production quotas in April due to technical reasons and would propose a plan to compensate for the mistake. You have watched the market review by InstaForex analyst for Thursday, May 23. Subscribe to InstaForex TV channel and we keep you updated on all market developments. Feel free to ask any questions and leave your comments. And see you online tomorrow.